Hello and welcome to Martin Lucas Investor. My name is Sensei, and you are here watching a special event, the FOMC Minutes. They're coming out in less than 20 minutes, so make sure the first thing you do is hit that like button, subscribe. Some of you might say, this doesn't mean anything. The FOMC is what's important. I would disagree. This time round, the FOMC was pretty boring actually. Everything as we expected. Nothing said by Jerome Powell that moved the markets. The S&P 500 swung less than 1% on the FOMC. So this event actually, I think, will move the markets more. It's the FOMC minutes. So it's sort of their thoughts behind the scenes. Remember, Jerome Powell will never tell you there's a rate cut coming or there's a rate hike coming, but it's the wording. His wording didn't give much away during the FOMC, but the minutes of the behind the scenes. Most people don't care about the minutes. On this show, we care about the data. The data is in the minutes. We're going to be receiving the minutes in less than 20 minutes. So let's get prepared for that. If you have just tuned in, 17 minutes to go until the FOMC meeting. Make sure you hit that like button. Make sure you subscribe. Even if you're here watching later, you can still hit the like button, subscribe. This will still be relevant to you. Also, tomorrow, the biggest day of them all, an even bigger event, $2,000 giveaway plus more. That's happening tomorrow. If you haven't entered, look in the description. I think it's the second link in the description. Look at the pinned comment. You can go over to that event. You have to be present to win, or you can get an email and you've got few minutes to get in, but it's best to be in to make sure you can claim your 2000. It's free to enter, free for all. We don't do scams here. You can win with just one ticket. I'll tell you more about it later on in the show, but the link is also pinned if you want to get a go ahead and get right into that giveaway while we wait for the minutes. But here it is, Jerome Powell, the man of the hour, navigating the December FOMC minutes. That's what we're going to do. This is Jerome Powell. He's got a difficult job, poor man. He does. It's keep inflation under control, keep unemployment under control, keep the economy under control, and try and keep Donald Trump happy. We all know he's going. We all know there's someone going to come in, which is a lot more dovish. However, what I want to make clear to everyone is just because we have Hassett coming in or Fed Waller coming in possibly, and they want to cut rates, doesn't mean that the committee are all going to start cutting rates. Just because one person, remember, it's a whole committee. One vote doesn't change it all. Thank you, human being Liz. Thank you, Sam. Nice haircut. Thanks, guys. it was about time to get a haircut. I wanted to do it before Christmas, but the time didn't present itself. But I thought, well, we've got a major event tonight. Must I get myself a haircut? It nearly resulted in me not being able to do the show. I got caught in a there was a crash on the motorway, so I'm glad I'm here. We've got it all prepared for you. So in 15 minutes time, we're all going to be prepared. There is not going to be any drama here. We're going to go through what the minutes mean, what to look out for when the event starts. You're not going to miss anything because we've got Bloomberg ready to go. While Bloomberg is playing, we're going to be analyzing the minutes behind the scenes. That's going to be released by the Federal Reserve over here. We're going to, as you can see right now, there is no minutes right now for the FOMC meeting that happened earlier this month. You can see, for example, on the October one, the minutes on the top, on the right above my head, you can see the minutes were released for the October one. They normally get released a couple weeks after. So obviously we've had the FOMC decision. It was a rate cut. Now, it was a rate cut. Yeah, was it a rate cut? Last one was a rate cut. And what we want to see now is looking forward into 2026. The Federal Reserve dot plot suggests one rate cut. The market is pricing in over here. Remember, we've got everything prepared for you. The market is pricing in by December 2026 a rate of 3 to 3.25. That is two rate cuts, two 0.25% rate cuts. That's what the market's pricing in. But actually, if you look over here, all the way down this list, if you keep going, you can go all the way down to 0.1% chance that we're at 1.75 to 200%. 200 basis points rate cuts. That means that from today, we actually cut rates not once, not twice, not three times, not four times, not five times, not six times, 7 rate cuts. There is a chance that the market's pricing there'll be 7 rate cuts, but of course it's 0.1%. There's a 1% chance of 6 rate cuts. There's actually a 3.8% chance, but you have to plus the other one, so about 4.5% chance that we get 5 rate cuts. About a 20% chance we get 4 rate cuts. Around a 50% chance that we get 3 rate cuts. So the market's pricing in more rate cuts than the Fed has actually put on their dot plot. That's what we want to analyze with these minutes that come out in 13 minutes time. If you have just tuned in, please share this out, hit the like button, subscribe. It takes 1 second. Have you hit the like button? I know you haven't. Just hit the like button. Okay, so let's get ready for it. 13 minutes to go. Let's go to our very own newsletter. If you haven't got the newsletter yet, you get all of this information every single day, whether it's FOMC day, whether it's minutes, whether it's data, whether it's CPI, PPI, jobs data, macro news, silver squeeze, everything we cover in detail without the nonsense in a daily newsletter, plus all the news every single day, a deep dive, a chart, all of that. Training course is coming to a newsletter very soon. My portfolio analysis is coming to the newsletter very soon. You get all of that plus many, many more things with the newsletter. There's a 1-week free trial for the premium plan. Go and check it out. It's in the link is in the description and in the live chat. There's also a free plan. The free plan, if you are a member of the newsletter, free or not free, you can claim tickets to win $2,000 worth of XRP. I'll tell you all about the $2,000 giveaway later on in this video. If you want to find out before that, you can go and look at the link, the pinned comment, and also in the description. We're giving away $2,000 worth of XRP tomorrow, plus more. Deep dive, navigating the December FOMC minutes. That's what's happening in 11 minutes time. Let's get ready for it. So as we approach the final trading hours of 2025, market participants are focused on a critical release. More important than the FOMC, in my opinion, it's the minutes, it's behind the scenes. The minutes of the December the 9th to 10th federal FOMC meeting. While the Federal Reserve, we know already, they delivered a 25 basis point rate cut earlier this month, lowering the federal funds rate to a range of 3.5 to 3.7%, the decision was far from unanimous. And that's the key point. Not everyone voted. Remember, it's a committee, I think, of 11 people. This time round, they weren't also unanimous. There was people not wanting more rate cuts, wanting to pause. The forthcoming minutes are expected. So if you thought Jerome Powell's the worst and he's the one that doesn't want to cut rates, there's people in that committee, at least 3, that don't want more, that didn't want a rate cut. The forthcoming minutes are expected to reveal a committee deeply divided over a trajectory of 2026 policy. And if it does confirm that, the market doesn't like the uncertainty. With 3 official dissents, the most since 2019. Dissenters are the ones that didn't follow Jerome Powell's decision. The narrative has shifted from a clear cutting cycle to a hawkish cut. This term describes a scenario where the Fed lowers rates, but simultaneously signals that the bar for future reductions has significantly heightened. A hawkish cut is what we got. Sophisticated investors, and that's what we all aim to be, are currently weighing whether the Fed is entering a prolonged pause, are we just not going to get any more rate cuts, or is the labor market's fragility going to force their hand in coming quarters? That's what will cause them to cut rates. What will cause them to cut rates? What are we looking out for in these minutes? If the jobs market is a concern to them, because the only way to fix that jobs market and unemployment from reaching new highs, which we don't want to see happen. We kind of want to see indications of that happening. Why? Well, because that's when the Fed will cut rates. If they have inflation under control, the labor market under control, and the economy is forecast to grow in 2026, which it has, which their reports suggest. Remember, we got their SEP in the FOMC earlier this month. We looked at it and it projected growth, more than expected growth in 2026. We looked at GDP earlier this month. That was actually a surprise towards the upside, about 1%. They expect inflation to start cooling and tariffs to be one-time hit. Jobs market is expected to be pretty steady. That paints the picture, no rate cuts. However, we will see what the behind-the-scenes discussions have been. These are the things we need to look out for. Labor market mirage and payroll revisions. Labor market is the most important. We'll be analyzing the Fed minutes in 8 minutes and 55. We've got the document ready. We're ready to refresh to get that document, analyze it behind the scenes while we go to Bloomberg and also look at the rates. So this is Bloomberg here.
Shadow fleets, Iranian, Russian tankers that are.
I've just got that all fast forwarded, so it's ready to go as soon as that drops. So number 1, the labor market mirage and payroll revisions. One of the most significant points of contention within the committee involves the accuracy of employment data. During the December 10th press conference, and this was very weird, but Jerome Powell did say it, Chair Jerome Powell noted that internal staff analysis suggests official payroll gains have been overstated by roughly 60,000 jobs per month. That's what gave the market hope, because essentially Jerome Powell said the government data is wrong. There's actually 60,000 jobs that we're over accounting for. There's less than 60,000 jobs per month, showing weakness in the labor market, and then therefore the market will start assuming rate cuts. If the minutes show a broad consensus that the labor market is weaker than headline numbers suggest, it will signal a dovish tilt. Remember, we're looking at the minutes. It's a whole document. We're going to analyze it. The key points are going to come in. We're going to be looking at the market as well. We've got XRP and Bitcoin on the screen. Let me see if I can make that a little bit bigger for you guys. Let me go over here, make this a bit bigger. There we go. We're actually down now going into the minute, so we'll keep an eye on that. So remember, a weak labor market, as long as it's not horrendously weak, if a weak labor market, if we get suggestion of that, that will suggest rate cuts, and that's a dovish stance, which will push the markets up. Investors are currently looking for specific language regarding downside risk to employment. If the committee views current job growth as hitting a tipping point, the market may begin pricing in more than a single 2026 rate cut, currently projected by the median dot plot. The dot plot, not the market, the dot plot, official Fed, signals one rate cut. The Fed watch tool, market participants, they're all over the place. But if you look over here, this is the biggest bar. They predict 2 rate cuts. The consensus is, but it's only 31%. There's actually over 50% chance it's 2 or more. Dot plots 1, market participants are 2 or more. And what we want to see today in the minutes is which one is it? Is it 1? Is it 2? Is it 2 or more? Take away the uncertainty, bring a bit of certainty into the market, and that will affect the markets. More tone about unemployment being an issue, dovish, more cuts. More tone about we don't need to cut rates, and the dissenters were right, they don't need to cut rates. That's what we're looking for. So investors are currently looking for specific language regarding to downside risk to employment. If the committee views current job growth as hitting a tipping point, the market may begin pricing in more than a single cut currently projected. The dot plot is a visual scatter plot where each of it's 19 Fed officials mark their expectation for future interest rates. Conversely, if minutes show that the officials downplayed the 60% job discrepancy in favor of historically low unemployment, it would reinforce the hawkish narrative the Fed is finished with easing. There's a good chance the Fed might just be done. No more rate cuts are needed. We're at, some people are making that argument, we are at that neutral rate. If you hear the term neutral rate, it means they don't need to cut rates. That's the rate that they'll keep. The Fed minutes is behind the scenes of the FOMC early in the month. It's more influential than the FOMC. That's what we're covering in 4 minutes. So in 5 minutes' time, we're going to move to Bloomberg. Behind the scenes, the analysis is going to start taking place. 10 minutes after, in 15 minutes' time, we're going to have the full analysis. We're going to be exploring that. So stay with us throughout the event. Then in 15 minutes' time, in 20 minutes' time, I'll be telling you how to win $2,000 worth of XRP tomorrow. It's the best time to enter. All you can do right now is make sure you hit that like button. Make sure you subscribe. If you haven't got the newsletter, it's one of the entries to get the $2,000. It's in the live chat. You get all of this information every single day as well. But hit that like button and subscribe. Number 2 is the tariff inflation tug of war. The Fed's path in 2025 has been defined by a volatile relationship with inflation. After pausing the cutting cycle in spring due to tariff-induced price spikes, the Fed resumed easing in September as labor concerns took center stage. However, the December minutes will likely detail a heated debate over transitory nature of these price pressures. A hawkish signal today would involve heavy emphasis on inflation remaining sticky or elevated, particularly in the services sector. Inflation, it's above the 2% range. It's pretty sticky. However, the saving grace is tariffs look to be a one-time hit to inflation. And if you take the tariff inflation out of inflation, if you think tariffs didn't affect the US households and inflation, you're wrong. It did. Inflation did go up because of tariffs, but the good news is most people are predicting those tariff inflations is a one-time hit to inflation. And if they weren't in place, we will be very close to 2% or even at 2%. So we'll have to see how the Fed regards this. Are they going to continue to say it's transitory and inflation's under control, or are they going to start saying it's sticky? If they start saying it's sticky and they're worried about it, that means rates stay where they are, or possibly rate hikes in 2026. If they say they're not worried about inflation, that's cooling, then we can have a higher chance of rate cuts and the markets can go up. This is all happening in 2.5 minutes with the release of the minutes. Number 3 is the three-way descent. Markets don't like uncertainty. We got a bit of uncertainty. We didn't get the Fed all in line. Some people say it's a big issue, not everyone agreeing with Jerome Powell, and there was actually dissenters. Dissenters essentially means the committee was fractured. Some people voted for a rate cut. Most people voted for a rate cut. 3 people voted against the rate cut. And 1 person voted for a 50 basis point rate cut. Dissenters, in my opinion, are not a problem. It shows a healthy Fed. If everyone just agreed all the time, then there would be an issue. If the dissenting is going to get more, and more people are going to ask for pauses and no one else wants rate cuts, that's when we see a big fracture in the Fed and everyone starts getting worried about the uncertainty of the Fed. So we're going to analyze the dissenters. We're going to have in those FOMC minutes, if I give you an example from October, you'll get this sort of document coming out. We'll be analyzing behind the scenes. Bloomberg will be on this. We'll be analyzing it here. We'll be looking at the market. I'll give you my full analysis 10 minutes after the FOMC or 5 minutes after the FOMC gets released. We'll be looking at Bloomberg. If we see in there, we're going to see in there why the dissenters dissented, what the sentiment is, and that moves the market as well. We're going to hear about the neutral rate. The neutral rate, we might hear about it, we might not hear about it. We're not going to get confirmed rate cuts or whatever. They might start talking about the neutral rate. The neutral rate is the rate in which inflation's under control and the jobs market's under control. Some people say that we've hit the neutral rate. Most people say it's much lower. Some people say we've hit it. We need to see what the language is. Do we expect that we are at a neutral rate where we're controlling inflation, the jobs market, and we're not stifling growth? Or is the neutral rate lower? We will use the language around it to prepare. This has all come from our very own newsletter, so go check it out. It's the first link in the description. It's right now in the live chat. Everyone would have got this morning. Plenty of time to prepare. Now we're 38 seconds away from the minutes release. We're going to go over to Bloomberg. I'll be analyzing it behind the scenes while we're looking at Bloomberg. Then we'll have the full analysis, and then I'll tell you about the $2,000 giveaway. Here we go. Let's go over to Bloomberg. Let's see what's going to happen. They've just taken a break because this news is going to come out. We're going to be looking here. We'll keep an eye on the 10-year Treasury yield as well. The tariffs, the jobs. We want to hear them worried about jobs. We want to hear control. That will boost the chances of rate cuts. So let's go over to Bloomberg. Let's see. They're going to be live in about 1 minute's time. Here we go. Breaking news. Let's go to the markets. Okay, what are the markets doing? Let's see how they're reacting. Bloomberg is about to go live with it any second now.
Weekdays.
Let's go over to the minutes now while we wait for Bloomberg. Here we go. Here we go. Any second now, we will get Bloomberg on it, and I'm going to be analyzing it while Bloomberg is on.
And a very good afternoon, everybody, live across Bloomberg platforms. Some headlines. It's kind of a Fed Wednesday because we are getting minutes from the last Fed meeting that, of course, was earlier in December. I'm Carol Master along with Vonnie Quinn, and let's just get to some of the headlines. The Fed, most judged further rate cuts likely appropriate over time. They also said some saw keeping rates on hold appropriate for some time, and then several saw risk of higher inflation becoming entrenched. So again, this was from that last meeting, December 10th of 2025, and now we're getting the minutes. So some more clarity, some color, Vonnie, if you will, around what the Fed's thinking is.
I mean, it's fascinating with the dual mandate. Most judged labour market risks remained tilted to the downside and generally saw inflation risk tilted to the upside. So really, there's no joy here. And market reaction-wise, not too much, but we do have yields moving up about a basis point.
Yeah, and that's why we say the Fed, right? And Jay Powell and company, they are in kind of a tough spot, if you will, because both sides of that dual mandate, there are risks to both of them, and that makes it tough to figure out monetary policy. All right, folks, so as Vonnie mentioned, a little bit of movement in terms of the Treasury trade, in terms of the equity trade, not too much. We're seeing really a quiet market here as we get ready to wrap up just one more day of trading after today in 2025.
Okay,
right,
full
let's get
analysis
right
coming
out
up.
to
Stay with
Washington,
me.
Get more on those FOMC minutes. Tyler Kendall, she's Bloomberg TV Washington reporter. She's live at the Federal Reserve. Tyler, take it away.
Yeah, hey, Carol. Well, you really hit most of the main headlines here when it comes to what is a divided FOMC, with the minutes showing most officials see additional interest rate cuts as likely appropriate if inflation declines over time as expected. Yet we did get further signaling from some participants on the committee who suggested that under their economic outlooks, it would likely be appropriate to keep the target range unchanged for, quote, some time. According to the minutes, quote, several participants pointed to the risk of higher inflation becoming entrenched and suggested that lowering the policy rate further in the context of elevated inflation readings could be misinterpreted as implying diminished policymaker commitment to that 2% inflation goal. Participants judged that a careful balancing of risks was required and agreed on the importance of well-anchored longer-term inflation expectations in achieving the committee's dual mandate. Of course, the minutes really are putting a finer point on the fact that this was a divided FOMC as participants weighed the risks between employment and inflation. And of course, this was when we got that summary of economic projections and we looked at the dot plot, which had that range of projections for next year and where policymakers ultimately think neutral is. I'll give you one other quote that was important to pay attention to here, which is that, quote, a few of those who supported lowering the policy rate at this meeting indicated that the decision was finely balanced, or that they could have supported keeping that target rate unchanged. It is clear that these minutes are showing that there's a lot of divisions ahead, and it's not really clear exactly where that policy path is headed.
Yeah, exactly, Tyler. And we were looking to these minutes to perhaps give us a little more detail on just how fractious the committee is right now. Did we get any more detail on just the, the turbulence within the Fed and the variety of opinions?
$2 to a super chat.
Well, of course, there were
it.
the main dissents, Vonnie, when it came to the opposite ends of the policy spectrum. Of course, one of them was clearly defined in that of the newer Fed Governor Stephen Martyn, but we were also
Okay, this is going to move the markets. I am going to tell you how you can win $2,000 worth of XRP. The full analysis, it's going to come to me in 2 minutes and 40 seconds. Let's continue with Bloomberg. This is the minutes. This is important. This is the behind the scenes of the FOMC. This will tell us how many rate cuts we get in 2026.
Up because at this point, it's not totally clear exactly the destination that they are heading to, or how quickly perhaps they are going to get to that destination.
Yeah, and in terms of decisions, too, as we look ahead to what the Fed may be doing in 2026, the other thing we're thinking about, Tyler, is the decision by President Trump as to who will lead the next head of the Fed, or be the next head of the Federal Reserve. That press event yesterday, he talked about that he has a preferred candidate. He said he could still fire Jay Powell. I'm just curious if you're getting any more intel from the White House about who it might be, when we might get a decision.
Right, exactly. Well, we heard President Trump yesterday say that he still has his favorite pick, and that has not changed, and that he will announce him when the time is right, in President Trump's words, though he did go on to indicate that we can't expect a decision within the next month. But it comes as the White House is continuing the interviews. Bloomberg News has confirmed that BlackRock's Rick Reeder will meet privately with President Trump at Mar-a-Lago as we really zero in on the top 4 contenders. Our reporting indicates, of course, that includes Reeder alongside current Fed Governor Christopher Waller, also interviewed with President Trump earlier this month, and then, of course, former Fed Governor Kevin Warsh and the NEC Director Kevin Hassett. But really, President Trump has often made perhaps contradictory statements when it comes to his process and how he's going to choose the next Fed chair. But the one through line, the one consistency has been his criticism of the current Fed chair, Jerome Powell, as you mentioned yesterday, renewing his attacks on Powell, including potentially re-threatening, because we heard this earlier in the year, that there could be a lawsuit over the Fed's renovations to their headquarters where I am here in Washington. So something to watch closely. But of course, President Trump has previously indicated that Powell's job would be safe in a bid to tamp down on the markets.
All right, Tyler, thank you so much for bringing us those minutes. We were eagerly anticipating them, even if not everybody on Wall Street was around for them. That is Tyler Kendall in Washington, D.C. And I do want to just point once again to a tiny bit of Treasury selling. So we had the 2-year yield at 344. It's now at 345.24. So just up a very fraction. And the 10-year yield also up just more than a basis point at 412.19. The 30-year yield up about a basis point as well. And in terms of stocks, we're right back to where we were, very fractionally lower. But Carol, I do want to point out that the minutes did say, you know, there could be swings in measures of economic activity associated with the government shutdown. I mean, they're very well aware that we haven't got really good data in the last few months.
I think you hit on what's really important is at this point, the data is still not clean and people are, you know, kind of parsing through as the data comes out, coming off of the shutdown. And that's going to make it more difficult, as the minutes said, in, you know, terms of determining what really is the underlying growth in the U.S. economy. And so then how...
Okay, very interesting. We've got the full analysis for you now. The markets haven't moved yet, but I think they will. They are about to move. In about 12 minutes time, I'll tell you how you can win $2,000 worth of XRP live on the show. You can get the XRP, sell it for Bitcoin, sell it for cash, go on holiday, or buy the S&P 500. Do what you want with it, but I'll tell you how you can win it in 12 minutes time. The time is on the screen. Now, we've got breaking news coming to us with the full analysis. Let's go to it. Okay, we have analysed the full document here behind the scenes, and we are going to tell you all about it. What are the key quotes? Well, firstly, oh, I don't know what that just went across the screen. Firstly, what was mentioned the most? Inflation mentioned 43 times. Tariffs mentioned 20 times. Interest rates mentioned 9 times. CPI mentioned 3 times. And margins mentioned 3 times. Inflation. That is not good. Of course, it depends how they talk about inflation, but they mentioned it 43 times in that full report. That's telling me they might be concerned about inflation. If they're concerned about inflation, they keep rates high. Are we expecting rate cuts? No. In their dot plot, which we got on the 10th of December, they expect a 1 rate cut. That's the median dot plot was 1 rate cut. The market, if you look at the prediction by the end of the year, the market predicts 2 rate cuts. That could change right after this report. The next time this refreshes, it can change. If you go down this chart over here, there's actually a chance of 3 rate cuts, 4 rate cuts, 5 rate cuts, 6 rate cuts, 7 rate cuts. I don't think there's going to be 6 or 7, but the market can now. It might change. There might no longer be a chance of 3 rate cuts, 4 rate cuts, because inflation. If they're worried about inflation, they can even raise rates. So let's go back to our special report that's just come through. We've got inflation mentioned 43 times in that. Let's look at some key quotes. Hawkish quote number 1. Most participants remarked that core inflation has been pushed up by higher tariffs that boosted goods prices. We are worried about the tariff inflation. Tariff inflation, sorry to burst the bubble, does affect. Tariffs did bring inflation in. They're not like Donald Trump and deflationary. Tariffs have, they're not like what Donald Trump said. They don't have to be a big problem, however. What we want to see is what they say about it being transitory. But yes, they are saying tariffs have pushed core inflation up. And the Fed's job is to control inflation as well as control the economy. Quote number 2, we've got another hawkish quote over here. A majority of participants remarked that overall inflation has been above target for some time and has not moved close to 2% over the past year. Oof. Yeah, we are. Inflation. I just showed you up here how many times they mentioned inflation, and the first 2 times they've mentioned inflation. It's pretty hawkish. Once again, what the participants are worried about here within this, remember, we've just got this massive document released and we're just analyzing the key quotes here. In this document, inflation mentioned over and over and over again. Inflation is sticky. Inflation is sticky. That is true. What's the markets? Oh, yeah, I told you. I don't think this is good. The minutes is a bit worrying. Oh, and Bitcoin is dropping hard as we speak. What is the general market doing? Let's go back over here. Yeah, we're dropping a little bit on the market, so I'll keep that on the screen right now. Guys, make sure you stay with us. 8 minutes time, I'm going to tell you how to win $2,000 worth of XRP. You need to know what the boring stuff is. The boring stuff is the minutes. Everyone keeps an eye on what the interest rate decision. Everyone knows the interest rate decision. If you're a sophisticated investor that wants to make money, you listen to what happens in the minutes. It's 15 minutes of your time. Stay watching. And you get to win $2,000. I don't understand why anyone wouldn't be hitting the like button, subscribing, and watching. So, again, a hawkish quote about inflation. Inflation mentioned over 40 times in the report, and this one is another hawkish reference, suggesting, guys, let's take a step back. Inflation has been above target for 4 years, and we're still sticky at 2.8%. Yes, it was mainly caused by tariffs. Yes, it's probably transitory, but we can't have inflation at this sticky. Another hawkish remark there. Quote number 3, inflation persistence. Oh God, it's all about inflation in this report, isn't it? I said, if it's all about going to be about inflation, it's not looking good. Let's go through all these quotes. Inflation persistence is conditional. So here we go. Regarding the outlook for inflation, participants generally expect inflation to remain somewhat elevated in the near term before gradually. Okay, so yes, they're saying they think inflation is going to stay a little bit sticky and then gradually move to 2%. That's not very hawkish. That's conditional. And we've got another one here. Is it about inflation again? Oh God, I think it is. Many participants emphasized that they expected that the effects of tariffs on core goods inflation would wane, although some expressed uncertainty about when these effects would diminish. Oof. Why don't I like that quote? I don't like the quote because it's showing that dissenters are having power in the markets. What are the dissenters saying? Well, the dissenters are saying everyone's saying inflation is a slight problem, but some people are saying, are we actually going to move towards 2%? They're expressing some uncertainty. Market hates uncertainty. They've used the word uncertainty in the report. Let's continue flying through these quotes, and then we'll have the full analysis in a second as well, right before we go over to the giveaway of $2,000, and I'll explain all about it. Let me just move that back a few minutes so we can do the full report before we come on to the giveaway. The market is rebounding slightly. We've got XRP on the left, Bitcoin on the right. Let's keep an eye on them. We've got another hawkish quote here. Participants generally judged that the risk to inflation remained tilted to the... Not good. Lots of inflation measure, and that's why that's the first thing I showed you. Inflation seems to be the topic of the day. 43 times mentioned. Most of the time, if it's inflation's being mentioned, it's not really a good thing. And here we go. Most people say the risks are still tilted to the upside. We've got a dovish quote here, though. At the end, we go through all these quotes. I give you my opinion. Am I more dovish, more hawkish? If I'm hawkish, I expect more rate hikes or pauses. If I'm dovish, I'll expect those rate cuts. I'll tell you my final thoughts once we go through the whole report in the next few minutes. Quote number 7. Oh, look at this. We've got a super chat, special guest on the show.
At Robert Rose 8726 donated £1.99 through a super chat. Loving this, watching on flight back from Seville.
Thank you very much. Look at that. On a flight back. He's watching the FOMC. This is how important it is. He's watching it on a flight. I love it. I love it. I love it. Thank you for tuning in. Okay, next quote here. Hawkish. Where are we? Some participants highlighted the risk that elevated inflation might... Okay. Yeah, we've done the persistent, that more persistent than expected. Okay, actually, this is a separate quote. Inflation is being mentioned too many times for my liking here. Quote number 8, inflation persistence. Another hawkish quote here. Some participants highlighted the risk, and these participants, remember, there was 3 people that voted against a rate cut. And they actually started voting for a pause. It wasn't Jerome Powell. It was other people in the committee. And they voted to pause. And I think those participants are highlighting the risk that elevated inflation might prove more persistent than expected. Essentially, they're saying everyone's expecting this inflation to just be transitory. The tariffs are a one-time thing, and they're going to fade away, and we're going to come back to 2%. Some people are ringing the alarm bells. They're ringing the alarm bells. There's an issue. There's an issue. What's the issue? They're saying, guys, inflation might stay higher for longer. They might not go away just because there was a one-time thing. And that could be the sentiment going into 2026. And if inflation is going to stay sticky for longer, rate cuts, we might not get 2 rate cuts. We might not get 1 rate cut. We definitely won't get 5 rate cuts, as some people are suggesting in the market. Quote number, let's go through all these quotes. I haven't made up my mind yet. I don't know if I'm hawkish or dovish. I don't like to make sudden decisions and trade based off it. I want to know exactly what the quotes are, do my analysis, maybe take a day or two. But by the end of this report, which will probably be in the next 5 minutes, I will have a side I will take. People say minutes are boring. I like minutes. This is the behind the scenes. This is the thought process of all the Fed committee, and they determine if we get rate cuts or not. Not just Jerome Powell, not just Hassett, not just the day. It's all of this. We've got a few more quotes here. Participants noted that the market and the survey-based measures of longer-term inflation expectations remain stable. Participants have emphasized the importance of maintaining well-anchored longer-run inflation expectations. Not much said there, but here we go. We've got some dovish comments here. Labour market. Remember, I said if they talk about the labour market, it's dovish. They've said a couple of things about the labour market within the minutes. What we're doing right now is we've just got the FOMC minutes released. This is this whole document. It gives us a behind-the-scenes look into what the Fed are thinking. We're going through it with the main quotes, and then we'll make a final analysis, go back to Bloomberg, and then tell you how you can win $2,000 worth of XRP live on the show. If you have just tuned in, if you can just hit the like button, it takes 1 second. Just hit the like button. Subscribe if you haven't done so already. If you want all this information, and if you want the daily newsletter, and you want the training course and everything that comes alongside it, with the debt planner, budget planner, the deep dives, the Sunday XRP, the only XRP newsletter every Sunday, you get your XRP newsletter, the charts, the chart analysis course, all of those things, plus more and more and more. Well, you can win $2,000 by signing up to a newsletter. It's one of the ways of winning. I'll tell you all about it. But you can also become a premium member. You don't have to be a premium member to win the $2,000. You just have to be a subscriber to the newsletter. There is the link for the newsletter. Make sure you are subscribed either to the free plan or the premium plan. The premium plan is what you get the 1 week free trial for. Quote number 11, labour market cooling. Dovish. Here we go. Here's the other side of the argument. With regards to the labour, this is a quote directly from the minutes. With regard to the labour market, participants observed that labour market conditions have continued to soften. Okay, that's the counter argument. That's the counter to actually we might get rate cuts. Yes, inflation, some people are saying inflation's an issue, but we've actually got members on the committee also saying the labour market conditions have continued to soften. If the labour market conditions continue to soften, what does that mean? Well, it essentially means the Fed have to cut rates because to an extent, if the labour market's softening, rate cuts is what supports the labour market. If you see unemployment going up, that's why the Fed's been cutting over the last year, because they're worried about the labour market and unemployment. And this is also suggesting they are still worried about it because the labour market conditions have continued to soften. Okay, so it's 3-1. 3 to the Hawks, 1 to the Doves. Let's continue with the report. Another dovish comment here. Most participants remarked that some of the recent indicators pointed to continued softening. 3-2. 3-2 now. We've got Hawks on 3. Doves on 2. Another comment in their FOMC meeting suggesting that participants are thinking that the labour market is going to continue to soften, meaning unemployment is going to go up, meaning they have to do something about it. Let's continue. A few more quotes here, then we'll do the final thoughts. Quote 13, conditional. Some participants noted other indicators suggesting more stability. I'm just going to read the conditional ones because I don't think it's good to know. I'm going to read the whole report after this as well and give you my thoughts tomorrow. But 99% of it is what's hawkish and dovish. That's what we need to read. So let me just brief over the conditional. Participants generally viewed that low in the labour markets as reflecting both lower labour demand and decreased labour supply. Oh, there we go. We've got a hawkish one here. Balanced of risks. Most participants judged that the risk to the labour market remained tilted to the downside. Most participants judged that the risk to the labour market remained tilted to the down. Okay, so they're saying the risks. So, okay, this is hawkish. and it's actually talking about the labor market. So this is most participants. What was the other quote? Most participants remarked that it pointed to continue softening. Yeah, what we're getting here is actually a hawkish outlook on. Remember, this is talking about the participants of the FOMC. What we've got here is them saying the labor market, the risks of the labor market aren't that high. We're going to finish this analysis in 5 minutes. I'll give you my thoughts, but right now we've got a special guest on the show. Let's listen into this.
Admahir_Ahmed 1990 donated £5 through a super chat. Thanks Sensei for covering this and explaining. Appreciate it. Love the newsletter. Amazing as always.
Mahir, thank you so much for supporting the show. I love it when people actually appreciate the work. It's a lot of time and effort goes into it, but I really appreciate it, Mahir. Mahir is a big supporter of the newsletter and the show, and he's just said, thank you for covering this. Yes, I know some people think this is boring. It's the minutes. Where's Jerome Powell? Well, Jerome Powell's in this whole document which we're analyzing. This is how we understand what's going on in the markets, how we don't just listen to X posts and all the random stuff. So I appreciate you for appreciating that we're covering this, and thank you for your kind comments about the newsletter. Newsletter is amazing as always. Thank you very much. Here is the newsletter link if you don't have it. The market is bouncing, so let's continue with our thoughts, and I'll give you my opinion. We've got another hawkish, so we're about 4-2 right now. Hawks versus doves. We've got a hawkish comment here. Layoffs could push unemployment rate sharply higher in a lower hiring environment, potentially signaling greater fragility in the labor market. I would actually change that to dovish. Remember, this report was done quickly, but at least we've got the quote. That is dovish. Layoffs could push unemployment rate sharp. Okay, maybe because it's sharply high, we could have an issue. But essentially, what they're saying is this is now 4-3. 4 to the Hawks, 3 to the Doves. I'm actually getting a bit more dovish as we go on with this. Why? Well, because they're now saying, because of all the layoffs going on, unemployment's going to rise sharply and we're into a low hire. So no one's hiring right now. People are firing right now. That is a risk for the labor market. What did the Fed do in that situation? They cut rates. Okay, we've got 4 more quotes, and then I'll give you my full thoughts, and then we'll go over to the giveaway. Quote number 17, dovish. Those who favored lowering generally judged that such a decision was appropriate because downside risks to employment have increased and upside risks to inflation have diminished or little were changed. Okay, so that's explaining, that's less of what's in the future, but that's explaining why they cut rates. They cut rates because the risk to employment increased. That means Feds can cut rates. The risk to inflation decreased. Rate cuts. But that's more backwards looking, not forwards looking. Forward guidance language. Here we go. Most participants judge that further downside adjustments would likely be appropriate if inflation declined over time as expected. So they're saying, this is important. This is very important. They're saying keep an eye on inflation. Keep an eye on inflation. If inflation comes down, we're going to cut rates. That's what most participants are saying. That's forward-looking language. That's an important quote. We're about 4-4 here. We're about doves and hawks. Hawkish statements, dovish statements are on par right now. We've got 2 more. It would likely be appropriate to keep the target range unchanged for some time after a lowering of the range at this meeting. Oof. Yeah, well, we expected this. Essentially, they're saying don't expect any rate cuts or hikes. So that quote within itself is telling me no rate cuts in January. I am 99% confident after reading that quote coming straight from the FOMC meetings. That is very clear to me. We're not getting rate cuts in the next FOMC. We are not getting rate cuts in the next FOMC. I am very confident to say that now. Another hawkish comment here is, though, as the last quote, those who prefer to keep the target range unchanged, okay, this is important, those dissenters expressed concern that progress to the committee's 2% inflation objective has stalled in 2025 or indicates they need to have more confidence. Okay, guys, this is important as well. A few important quotes here. I'm just going to push the giveaway back a couple minutes. So we do the final analysis, then I'll tell you how to win. that's important. Remember, I said we need to look at what the dissenters said. The dissenters are saying we didn't want to cut rates. We voted not to cut rates because inflation, our inflation objective to cut rates, our inflation objective to bring it down, we've made no progress. And that's true. They've made no progress. So more people can be joining that camp, and they're making the argument we should not cut rates. Inflation hasn't changed in 2025. And I think that's why they won't cut rates in January. So what's changed? We've compared this to the previous FOMC minutes. The language has softened. December explicitly frames tariff persistence risk as a lower probability. Okay, guys, this is even more important. We've got the full. So what we've done here is we've compared two documents. Document number 1, which is the December meeting. Document number 2, which is the last month's one. Is actually October's meeting versus December's meeting, because there wasn't one in November. Just before we go into this, this is actually going to be the most important part of it all. Just before we go into that, I just want to say, tomorrow, we are giving away $2,000 worth of XRP on the show. This is not a scam. We're a real channel. My name is Sensei. Martyn runs the channel. We've got Vaz on the show. We're live every single day. We're not like fake X accounts, YouTube, other YouTube channels. We don't take corporate sponsors. We're sponsored by the audience. You guys support us. You support us via memberships, via signing up to a newsletter, via watching us, super chats. You guys support us. We don't take corporate sponsors. Martyn turns down $30,000 deals, and we are even giving back to you guys. So we are our own money, plus a sponsor of the channel, which isn't a corporate sponsor. It's one of the members, Charlotte May Weddings, giving away $2,000 worth of XRP tomorrow. So what can you do to win? You have to be present tomorrow to win. I'm going to give you the event. Just set an alarm on your phone. Make sure you are subscribed. Make sure you've hit the like button. You can be winning $2,000 on New Year's Eve. What an amazing way to start off the year. How do you enter? Well, I'm going to tell you quickly, and then I'm going to explain it more after we do the full analysis. So this is the link, giveaway link. You click on the link I've just given you in the live chat. There's more than $2,000 we're giving away. How do you win? It's free to enter, free for all. Everyone can enter. You don't have to be a member. You don't have to be a subscriber. You can enter. You press that link. That link takes you to the screen I'm showing you over here. This is the screen over here. Let's just remove, wow, the market's pumping. I'm going to come back to analysis, but I just want to make sure everyone enters the giveaway. I know, I appreciate everyone's time. So you go to this screen here, it will tell you to enter. It will tell you, make sure you don't have any ad blockers, VPNs, that will affect your ability to enter. You go to this page here. What you can do is sign in using your email. You sign in there. Again, you don't have to pay for anything. And then you get presented with this screen here. Every single one is free. You can win with just one ticket, or you can do all of them. You can get 5 tickets in 5 seconds. You can get all the tickets in 5 minutes. Read the instructions. This one is magic number. This one is reposting this on X, and then you come back here, click that, claim your entries. This one is, if I refresh it, this one's, for example, subscribing to my newsletter, to the channel's newsletter, the Sensei's Insights newsletter. The link is also in the live chat. If you've subscribed to newsletter, whether you're a free member or a paid member, essentially all you do is type in your email and you've got 20 tickets to win $2,000 worth of XRP. You will get an email if you're a winner. You only have 5 minutes to enter to come into the show and claim it. So what you have to do is basically be present to win. So you have to be in the show tomorrow. I'll give you the link to that show. It's actually pinned in the live chat as well. The link to the event tomorrow. Let me play you this. This is from this is the event exactly tomorrow. So I'm going to give you the link in the live chat right now. Make sure you put your notifications on because this is tomorrow, and also put a click on it, and it tells you in your time zone what time it is. If you click over here, for me it's literally in 24 hours. Look at your time right now, go forward 30 minutes, and I think it's in 24 hours from right now. Let's listen into the trailer for this event.
XRP, it's about to go to $2,000. Well, it is, for one or more of you. What's all that about? Well, you know. At the end of this video, you'll be right there at the event of the year, our biggest ever giveaway. Simply watch to the end of this 2-minute trailer and you'll be there. You'll be here ready for the biggest event of the year. XRP will be $2,000 for one of you, or maybe more. There's a few surprises. Those of you that took part in our free giveaway, which was completely free, all the links are below in the description, martynlucas.com/giveaway. One of you is going to win a star prize. Many of you are going to get a prize as well. We're measuring those that got involved. I love doing this. I like stuffing it to the trolls, those that moan about life and stuff. If you got involved and you shared and you reposted and you liked everywhere, we've recognized you. And we're going to have what we like to call spin the flipping wheel. I like to call it spin the flipping wheel because it's extra exciting tomorrow night. We're going to put your names on here, the ones that got involved, the ones that really were excited and took part, and they want to be part of it. So if you did repost and you did share and you did everything exciting, I've got to do my face. I've got to do my face because it's the way it locks my phone. If you did all these things, we know who you are, and we're going to put your name on the list, and we're going to give you prizes as well. What we're going to give away? Well, I've been buying lots of XRP recently. I'm very excited. You want to win some prizes? You want to win some money? You've stayed to the end. Now you are at the event. Enjoy. Get involved. All the information is below. Stay where you are. You're all.
So that gives you a little insight into tomorrow night, about 24 hours away. You can win $2,000 worth of XRP plus more prizes. That will be coming directly to you. I'm going to give you more. Let me just put this. I'm gonna explain it again in 10 minutes once I've done with the analysis. I just wanted to make sure everyone has that in case I know some of you were asking in the chat, so I just wanted you to have it. Okay, back to the FOMC minutes analysis. Let's see if Bloomberg is giving us anything else.
On tariffs, he rolled out some tariffs on China in his first term. There was market volatility.
Nope. Okay, so here we go. Let's continue. We've just given you the 20 main quotes from that event. From that minutes. Again, all of you are going to be like, well, not some of you are going to be like, the FOMC minutes, they don't mean anything. The FOMC event was earlier this month. The FOMC event was earlier this month. The FOMC event was not that exciting this time round. Jerome Powell didn't give us too much indication. We already knew what was going to happen. The minutes have given us way more than the FOMC meeting actually did. And 5% of the people that followed the FOMC meeting are looking at the minutes. And this is what I'm going to be analyzing overnight. But right now as well, I'm going to have a 95% sort of idea of if I think I'm hawkish or dovish, and how many rate cuts I think are going to happen. So this is the part which is interesting. What changed from October? Remember, we've just got this one over here, which is from December, but we compare it to the October one. How has the language changed? Let's see how the language changed. Language that softened. December explicitly frames that tariff persistent risks as lower probability. Okay, so they're saying the tariff risks are lower probability, so they're less worried about tariffs. Reduced probability that tariffs would lead to persistent inflation pressures versus October's more cautiously framing that further reductions could add to the risk of high inflation. Okay, so as a whole, compared to October, it looks like they're less worried than in inflation. Let's keep the charts on the screen. That's XRP and Bitcoin. December adds several considered inflation upside risks to have decreased. December adds several considered inflation upside risks to have decreased. No parallel softening clause in the October risk language. Okay, so it does look like the risks to inflation, they're essentially saying, have decreased. Essentially saying inflation is no longer posing as a major issue. But on the conversely, language that has hardened was December states inflation has not moved closer to the 2% objective over the past year, while October says inflation has shown little sign of returning sustainably in a timely manner. December is more direct on not moved closer. December hold camp rationale is sharper. Progress is stalled in 2025. Yeah, so essentially, I've said essentially a few times now, but remember, there is going to be tons of language in this FOMC meeting. Very hard to distinguish what's changed, what's not changed. You have to look at the small details, and some of the things that we have taken away from the FOMC meeting is from this quote here: we're not going to get rate cuts in January. And what we're saying now is actually, yes, they mentioned inflation quite a few times in this report. Yes, they're not too bullish on inflation, but actually, if you look at what they've done, if you compare it to the language they used in October, and the language matters more than the words, it's suggesting inflation is less of a problem than it was in October, or the way they're framing it. The difference is over here, the hold camp. We had people dissenting. We had people suggesting we shouldn't cut rates. 3 people in the committee came out and said we shouldn't cut rates because progress has stalled. So it's hard to distinguish. Is inflation a real problem? Are they saying inflation's a real problem, or are they saying it's worse of a problem? I think what they're saying Nick Jones, thank you for the super chat. Let's listen.
At Nick Jones 106 donated £1.99 through a super chat. You see Martyn, sleeping face emoji, live yesterday? Discord chit chat.
Did I see Martyn live yesterday? Discord chit chat. I don't know what you're on about, Nick Jones. Let me have a quick look at Discord chit chat. Discord general chit chat. What do you mean, Nick Jones? General chit chat yesterday.
Have Israel, and you report for Israel. I know you're very proud of it, and you do a great job. You might not have.
Oh, I love it, guys. You guys can also join the Discord. There's a link in the description. We've got I'll see if I can bring that up later, Nick Jones. Thank you for sharing it on Discord. Nick Jones might have caught Martyn closing his eyes for a second. I can't see properly right now. I'll look at it later, Nick Jones. Thank you very much. We're focusing on the minutes right now. Yeah, it's very difficult, guys. The Fed doesn't even seem like they know what they're doing. No one really can tell the future. There's some people in the Fed saying inflation has very upside risk. Some people saying in the Fed, we're closer to our 2% objective. Some people in the Fed saying, let's hold and let's not cut rates because inflation's a problem. We're all over the place in these minutes. I'm going to be honest now. There's a lot going on in these FOMC minutes all over the place from the Fed. The Fed have lost it. The Fed, these quotes, even though they're very important, there is what it's showing me more than anything now is the Fed they don't know what they're doing, or there's a lot of people in the Fed that are disagreeing now. What I would take away from the inflation story is essentially let's just break it down. I'm going to have to move this timer back again. Sorry, we haven't fully done our analysis because the Fed doesn't even know what they're saying anymore. If I had to interpret what the Fed are saying is, and again, let's just draw a conclusion for the whole Fed. There's some people in the Fed that say inflation isn't a problem. There's some people that say inflation is the biggest problem. What I would say is going on is inflation has stayed too high for too long. Inflation's at 2.9% and it hasn't returned to the base of 2% for 4+ years. Major problem. Now, it's been high for too long, but if you take tariffs out the picture, inflation is much closer than 2% than you think. So, tariffs are going to be out the picture by next year because it would have passed through inflation, transitory. I think it's not a problem. I don't think inflation's a problem anymore. And I don't think the Fed thinks inflation's a problem anymore. It just looks bad. It's looked bad. It's been bad for too long. Inflation's been a real problem. I mean, if you think about inflation over the last 4 years, things aren't going to get cheaper, guys. They're going to get more expensive. We're not having we're not in disinflation. We're not having deflation. We're not having disinflation, we're deflationing. Essentially, it means inflation's getting lower, but we're not getting cheaper. So inflation's been bad for too long. The 2% goal we're too far away from now. We should get back to it. However, if we logically think about it, tariffs caused this. We would have been closer to 2%. Tariffs will be out the picture because we would have been a year on from the tariffs soon in 2026. So essentially, it's not really a problem. I don't think inflation's a problem. I think they have to pretend it's a problem because it's been high too long. But I don't think inflation's a problem. If you take tariffs out, unless tariffs come back or we have extra tariffs or we have another economic situation, if we're looking at the market we're in right now, inflation's pretty close to 2%, take tariffs out. And if you don't want to take tariffs out, wait another year and we will be at 2% if we stay where we are. So I think they're just worried about how it looks. It's been high for too long and they need to make some noise about it. I don't think they're worried about inflation, which is good for the markets. Because if inflation isn't a problem, then we focus on the labor market. Let's see if any new risks are introduced. That's my thought. That's what I've taken away from the quotes we got about inflation. I've taken away a bit of a manic Fed, but I've also that's my thoughts. Let's look at the new risks introduced. December introduces balance sheet implementation actions and reserve management framing as explicit operational considerations in the policy package. Risk de-emphasized or removed. October highlights unnecessary uncertainty around tariff pass-through timing and magnitude. December still notes uncertainty, but more weight shifts to effects would wane alongside uncertainty about timing pass-through. So they're less worried about tariffs. That's exactly what I've just said. Change in confidence or conviction. December increases internal patience optionality post-cut. Keep the target range unchanged for some time after, whereas October shows disagreement about whether cut was even likely at a December meeting. Interesting. So obviously October minutes was suggesting, are we going to cut in December? They were saying it might not be likely, but we did get a cut in December. Now we've got confirmation we're not getting rate cuts. Okay, two things we can take away now. Okay, it's all coming together now. Inflation, that some people are acting like it's a problem. It's not actually a problem. If we're looking at rate cuts, we're not getting rate cuts in January. Okay, we're building a picture. Now let's go over to dissenters. Context, not speculate. Yeah. So who dissented? In December we got Stephen. He's dissented twice. Once in October, once in December. He wants 50 basis point rate cuts. He wants 50 basis point rate cuts. And then we've got Austin and Goolsby and Jeffrey that want no change. So we've got one person that wants 50 basis point rate cuts and 3 people that want pause. So we've got 4 people dissenting. Why they disagreed. And this is why this is what's explained in the minutes. The people that wanted no change, the people that dissented and said we don't want rate cuts, there's 3 of them there. Yeah, 1, 2, yeah. Their concern is that inflation progress is stalled. They need more confidence. Inflation is coming down sustainably. Also notes the value of more incoming labor and inflation data for judging reduction. So yeah, I'm not worried about the dissenters. They've only dissented because it looks bad. It looks bad that inflation is still that high. They've also dissented because they want more data. Well, bring on the data. Bring on the data. That's all we're going to look at now. If you see us covering CPI, PPI, jobs data, PCE on the show, click on it because that's what will change their minds. If we've got inflation coming down, they will change their mind from pausing to actual rate cuts. So I'm not concerned about those dissenters at all. 50 basis point preference, December. Preference is stated. Rationale beyond preferring a larger cut is not specified in the provided dissent lines. Okay, we don't have a reason. So rationale isn't really provided. October dissents, we don't need to worry about. So yeah, obviously there's one person that just wants 50 basis point rate cuts because he thinks the rate we're too restrictive, but that's only one person. The dissent trend is October has 2 dissenters, December has 3, so we've got more dissenters, and it's more split. I'm not that person that comes out and say if everyone disagrees with Jerome Powell, we've got a big issue at the Fed. I think dissenters are normal. And healthy. If we get too many dissenters, that's when it becomes a problem. So far, I'm actually now tilting a bit more bullish. Why? Because inflation is not too big of a problem. Those people that voted against rate cuts, they will vote for rate cuts if the data presents itself as inflation's coming further down. What else have I taken away? I've taken away that we're not going to get a rate cut in January. And we want to look a bit more into the job side of things, but so far it looks like they're not too worried about jobs, but if they were going to be worried about anything, it wouldn't be inflation, it will be jobs. So inflation signal check, language based only. October description, inflation moved up, remained somewhat above. Inflation moved up, remained somewhat above 2%. Core elevated with housing disinflation offset by higher goods inflation, tied partly to tariff increases. Several notes seeing aside tariff effects, inflation was close to target, but many stress it may have been above target for some time, with little sign of returning sustainably in a timely manner. December description, inflation moved up, remained somewhat above 2%, with missing recent official inflation data. Core pushed up by tariffs. Yeah. So again, remember we had the shutdown. We weren't getting the data out, so they're commenting on that. They're saying inflation moved up, remained somewhat above 2%, with missing recent official inflation data. Core pushed up by tariffs. Has not moved closer to 2% over the past year. Risk to inflation still upside tilted, though some of those upside risks have decreased. Explicit mention of non-tariff input pressure. Yep, they're not too worried about inflation. Shifts in language, confidence in disinflation. December keeps moving gradually to 2%, but pairs it with not moved closer over the past year. That's why some people didn't want the rate cut, because it hasn't moved. However, it is moving towards 2%. So that's the key thing. Concerns about persistence. December repeats persistency risk explicitly, might prove more persistent. Okay, here is the rate cut implications. This is the last part of the analysis. We'll go over to the final verdict. We're looking at the markets. They're up, they're down, they're all over the place, just like the Fed. The Fed, inflation's a problem, inflation's not a problem. Rates are coming down, rates are going up. The market's reacting like these minutes. Rate cut implications, no forecasting. If interpreted at face value, the December minutes support patience after the cut, with explicit language that it would likely be appropriate to keep the target range unchanged for some time after, easing to evaluate lags and gain inflation confidence. Guys, we're not having rate cuts in January. We probably won't get them in February. We're just going to have to push this back 5 minutes again. I apologize. Let me just look at this over here. Are we even having a rate cut? No. So yeah, January we won't get a rate cut, and that will take us all the way to March. So we're going to have 3 months essentially without a rate cut. That's pretty much confirmed now. That's what's taken away from the minutes. We're not getting rate cuts in the next couple months. And we might not get it in March either. If interpreted at face value, the minutes leave room for further easing, but on condition that inflation declining over okay. No rate cuts in the next couple months. Maybe not in January, maybe not in March. However, we can still get rate cuts as long as we keep an eye on inflation data. That's more important. If inflation is coming down, we'll be keeping an eye on CPI, PPI, PCE. Live on the show, if we see that coming down, they will cut rates more than the one time that we were promised. If interpreted at face value, the minutes justify restraints via the hold camp rationale. Inflation progress is stalled, needed more confidence inflation is coming down sustainably. They're going to keep rates where they are until inflation shows it's coming down. That is the point of the minutes. That's the main thing we can take away from the minutes. Inflation, keep an eye on it. If it comes down, they'll cut rates. They're not going to cut rates otherwise. We're not expecting any rate cuts until we get that data. And that's why the next inflation report is going to be really important, because if it doesn't show us coming down to 2%, more people are going to start. Because remember, the market right now has priced in all these rate cuts in 2026, sorry. If at the slightest hint that inflation is not coming down, the market's already analyzed that inflation is coming down. If we get the slightest hint of inflation not coming down, the market will crash because we are pricing in rate cuts. If we get confirmation that inflation keeps coming down, the market will start pricing in more rate cuts, because that's what the FOMC minutes have said. If we get inflation to even show it slightly coming down to 2%, they will cut rates. Even the people that said we should pause, they will turn over to rate cuts. Investor takeaways, crypto and stocks. Here are the final takeaways. The minutes pair a cut with explicit permission to pause, implying policy risk may concentrate around how long does the hold last, not just direction. Inflation language is not a clean all clear or not moved closer, as upside tilted risk framing remain active constraints on easing narratives. So again, we don't have a clear inflation language, apart from the fact that if inflation comes down, they will all cut rates, which is great to hear. That's actually pretty bullish, because those people could have chosen not to cut rates or voted against rate cuts because of other reasons. It's only because they want to see more data. So if they see the data and inflation coming down, they will also join the camp of rate cuts. The labor market discussion stresses fragility under lower hiring, which keeps downside risk hedging in play without a stated recession narrative. Tariff pass-through is framed as likely to wane but still uncertain, which keeps inflation debates alive, even in a gradual 2% base case. So most people think tariffs are not going to have an effect, but they're still slightly concerned about it, but they think we'll go back down to 2%. The committee split widened. There was more dissenters, increasing the odds that future communication leans conditional rather than directional. Balance sheet implications, steps, reserve management purposes. Yeah, that's fine as well. Final verdict. Here we go. This reads as a continuation without a warning. If you have just tuned in, we've just got the Fed minutes out. We've analyzed it. Here's our final thoughts. Make sure you've hit that like button. Oh, it means we've already done the breaking news. Didn't mean to hit that. I apologize. There you go. Smash the like button and subscribe. This reads as a continuation without a warning. Because the committee still frames further easing as plausible if inflation declines as expected, and warning because multiple passages emphasize stalled inflation progress, upside tilted inflation risks, and the case for holding policy unchanged for some time after easing to regain confidence. This is great. The tone keeps inflation credibility highly salient while also acknowledging elevated downside labor risks. And it widens the gap between Fed guidance and market expectations, mainly by making patience after the cut an explicit defensible baseline rather than an implicit possibility. Fed minutes are out. Our analysis is out. The Fed are not going to cut rates anytime soon. The earliest we'll get it in March, and that will be still pretty unlikely. However, the Fed are very open to cut rates. The Fed are very open to cut rates. The people that wanted pauses will jump on the bandwagon of cuts as long as inflation data starts really moving towards 2%. They're worried it's been sticky for too long. They don't think the tariffs are too big of a risk, but they want to see inflation moving down. So rate cuts are not coming until March, maybe in March, more likely after. They're going to be in March if in the next few inflation readings are much lower. They've talked about the jobs market, and the only thing they've said is that the risk of the jobs market is slightly elevated. So again, everything we see there is supportive of rate cuts, but it doesn't mean we're going to get rate cuts straight away. So actually, in my opinion, after these minutes, I'll do a bit more analysis. I am pretty bullish on it all. There is obviously things that can change. If inflation goes up, then we're in a whole different issue. If the jobs market's really strong, then maybe they don't need to cut rates. But it's mainly on inflation now. If inflation goes up, we're screwed because they won't cut rates. But more likely, if inflation starts coming down, we're going to get rate cuts and liquidity will come in 2026. This is building out to be a pretty hopeful 2026. I think we'll get more than one rate cut that the Fed said. I think we'll get more than two. I think 2026, we're going to get 3, maybe 4. I would say 3. I think in 2026, let's see if I'm right by the end of it, we'll get 3 rate cuts. I think it'll be a good year. I think AI is going to be continuing to grow the markets. Every single analyst is saying the S&P 500 is going to have another great year, or it's going to be up again. So I think 2026 is going to be great. That's why I'm starting the portfolio challenge next week. What am I doing? Well, as Martyn did, he started with $5,000. Now he's at $300,000. I want to do the same. And I don't think there's a better time than investing then today AI is going to take over the world. And I'm not just talking about Nvidia, AMD, or these companies to invest in. I'm talking about the infrastructure behind the scenes, how to get involved with it. That's why I've been buying silver, energy plays, solar, all these sorts of things. We're going to be diving into it. It's all going to be on the newsletter of my portfolio. I'm going to be showing some of it live on the show as well. So if you want to access that, if you want to start 2026 off with a bang, then you need to start investing in yourself and understanding what's going on in the market. Start listening to the minutes, start understanding what's going on in the markets. And how can you do that? Well, you can do it with the newsletter. Every single day you get a briefing. You got the whole briefing today, what to look out for the minutes. You got all the 5 top stories. You got the chart of the day. You got the one big thing. You got my technical analysis. Every Sunday you get the XRP weekly newsletter. You get the if you go down the list, you get the ad-free experience, no ads. You get all my thoughts. You get the chart of the day. You get event cheat sheets for the FOMC, CPI, Japan carry trade, silver guide. You get the deep dive research. You get specialist reports written by experts. You get exclusive XRP weekly report. You get the one-on-one DM access. You get the financial planning tools. You get the portfolio insights app coming in 2026, and the chart training course coming January of 2026 as well. Right now you can get a 1-week free trial. That link is in the live chat right now. And now I'm going to tell you, let me remove this. Now I'm going to tell you how to win $2,000 worth of XRP as well. If you want the newsletter, there it is. It's actually one of your entries. Okay. Sensei, how do we follow the portfolio challenge? Some of it will be on YouTube. Well, most of it will be on YouTube. The portfolio will be, but the analysis behind the scenes, potentially when I'm buying it and when I'm making the decisions, will be on the newsletter. So you'll see it on YouTube and the newsletter. You'll see it on both, James. But the full analysis, the reasons, the journal, all of that will be on the newsletter. I have... Okay, thank you for getting rid of that, RB. I'm going to answer all your questions now, and I'm going to tell you how to win $2,000 worth of XRP. We've got this tweet right now from... Oh, am I paused for some reason? I'm back. What happened there? This is a X post from Martyn. It is going a bit viral right now. Look at this. This is directly from our newsletter. Let me play you this, and then I'll tell you how to win $2,000.
A millionaire with just 1,000 XRP, because XRP is expecting to reach $1,000 sooner than you think. What utter nonsense. None of it has happened, and the chance of that is absolutely 100% impossible. The claim that holding 1,000 XRP will make you a millionaire soon is mathematically impossible and a pure engagement trap. As we close out 2025, the price of XRP is sitting around $1.85, not the $50, $100, or $1,000 that Moon Boys promised you all this year. To hit 1,000 XRP would need a 60 trillion market cap, which is more than the entire US stock market combined. Whatever. While XRP has seen solid growth from institutional ETF adoption this year, targets like 1,000 are digital fairy tales designed to keep you bag holding while influencers profit from your attention. Always verify hype against basic market math. If it sounds too good to be true, you are the product.
Oh, muted. Oh God, I've done it again. How long was I talking? Goodness gracious. Goodness gracious. I was just reading Martyn's X post. Martyn reposted this. I would like everyone to go and repost it as well. You might get okay, just checking. Someone call Soundhound. Go and please repost this. This was Martyn's reply to it today. I talked directly to Robinhood, Bank of America, and Ripple, and I'm branded stupid because I don't think XRP is going to $1,000 by tomorrow, December the 31st. I mean, it's ridiculous. People are still calling for $100, $1,000 XRP by tomorrow. When will they give up, and when will people stop listening to these idiots? Remember, I have gone from $5,000 to $300,000 in 4 years live on the show. I want to do the very same. I'm excited to start that portfolio challenge. I bought XRP at 38 cents. We did that with our last challenge. Also, I'm not reading off something I found on X. It's our own newsletter. Yeah, it's all random X posts. Lol, and I'm stupid. Please see our post and read the daft comments. So yeah, go check that out. Go read some of the comments. You'll have some fun listening to people still thinking we're going to go to $100 or $1,000. But now I'm going to tell you about tomorrow's giveaway, $2,000. How do you win? Well, very simple. The link is pinned. It's in the description. I'm going to give it to you here. Everyone follow along. Follow along with me. I'm going to go step by step. The link is in the live chat. The link is in the live chat. I've put it in a million times. No, some people are saying I still don't know how to do it. The link is in the live chat. How many more times can I spam it before I get blocked? Click on that link. When you click on that link, where does it take you? Normally, it's better to do it on a desktop or something like that. It seems like I've got something there. It's better to do it on a desktop. You can still do it on your phone. Please don't use VPNs or stuff like that because we've got a very proper system that gets rid of the scammers and the bots. And sometimes it might think you're a bot if you're using a VPN. So if you're trying to trick the system, this, that, and the other, it won't let you. So you click that link. It will take you to the page over here. You will see this. You'll see how many entries you have. Obviously, I've got 5, but I'm going to remove it. I can't win. Martyn can't win. Vaz can't win. I just did that as a test. That will get removed. I don't know if I can. Martyn always removes it anyway on the day. So you can see how many entries you have, top left, the total entries, and the hours left. We're 24 hours away from the draw. Please make sure you've got this video over here. I'm going to give you the link. You've got it bookmarked. You have an alarm. Set your alarms now, guys. This time tomorrow, set your alarms because you have to be present to win. How do you participate? Well, you have to be present to win, or you get an email and you've got a couple minutes to join in. You've got 5 minutes actually from the point that email is sent to you come in, but it's obviously safer that you're in the show. And then you can claim your prize. If you're not there, it goes on to the next person. So you have this page here. Below, it'll tell you to enter, to log in first. Use your email, or that you can sign in with X or something like that. But mainly people use their email. We're giving away $2,000 plus extra merch and prizes and spin the wheel, all that sort of stuff. Here is your tickets. You can win with just one ticket. It's free to enter, free for all. In 5 minutes, you can claim all your tickets. In 5 seconds, you can have 5 tickets. You can win with just one ticket, or you can increase your chances by doing them all. Repost Martyn on X. You might have already done it. Then go and press this button, claim your tickets. Repost Martyn on X. You can click this button, claim your tickets. Post this on X. Once you've done it, claim your tickets. Daily bonus. Keep getting that every day. Subscribe to newsletter. Okay, I need to warn you about this. We've just increased the ticket. I apologize for what just happened there. So whoever's done it already, you can go do it again. The tickets are now, I think, 50. Let me see if I refresh it. It will let me in. Yes, it does. So you can enter again. Doesn't mean you have to sign up with a different email. Please don't use fake emails. We know if you use fake emails, you'll be removed and your entries will be removed. If you've already got the newsletter, just type in your email again, and it will know you've already subscribed, and you can claim your tickets. If you haven't done it yet, you just type in your email, you get 50 tickets. You can follow Martyn on X, follow Vaz on X, do the magic number, and you can win tickets. You can go to our sponsors page. It's not a corporate sponsor, it's one of the members. Go to their YouTube channel. Let me give you their YouTube channel. Please go and subscribe right now. That's one of your tickets. Magic number. Now we've got paid. So yeah, that's one of the sponsor as well. It's a member. His members show they've decided they want to get involved with the giveaway. So go and subscribe. That's another entry. Let me just see if I can get this. What else do we have? You can follow Martyn on X, follow Vaz on X, subscribe to the YouTube channel. You've probably done all of these things. Just go and grab your tickets. Make sure you have done them all. Visit this page. This page is our sponsors page. Let me give it to you. If you visit this page, you can get more tickets as well. Follow Martyn on TikTok. There's essentially tickets up for grabs. You can have as many as you want, as little as you want, and then you can win $2,000 worth of XRP paid out live on the show. So what does that mean? It means you can it means you will get payment, and you can change it to Bitcoin, keep your XRP, sell it for cash, go on holiday, or put it in the stock market. Do whatever you please, but you'll be paid as well. Okay, so let me go to the live chat, make sure everyone's got that. Let's see if there's any questions about the giveaway, or also any questions about the FOMC minutes we've just covered. Let me remove that as well. Don't know why that says that. I just went over 500 entries. Love it. Yeah, you can do it in 5 minutes. You can get all the entries. I love it. Comic, good luck to everyone entering the competition. Spin the wheel. Yes, there's going to be spin the wheel as well tomorrow. It's not just $2,000. And I just want to show everyone right now, Martyn has removed my tickets. If you look at it over here on the page, I have 0 entries. You can see, as always, me, Martyn, or Vaz cannot win. You can see I've just refreshed the page. I have 0 entries. I will have 0 entries. And it will be one of you guys winning. 0 entries. Martyn deletes it. He deletes it all the time. Me, Martyn, and Vaz cannot win. Martyn deletes the entries. As you can see, he's just deleted it behind the scenes. You can see I've refreshed it. I have no entries. There we go. Let's go back to the live chat. I'm excited for Sensei's portfolio challenge. Yeah, if you want to follow along, you're in the newsletter, James. You also see it on YouTube as well. There's the newsletter link if you don't have it. My alarm is set. Good luck, James. Wish you the best of luck. God damn it. Did you guys just see that? James, how do you get so many more? I have no social media, but I had some tickets. James has been doing it every day, I think. Getting the daily bonus, all that sort of stuff. Liz, I try to do everything. I think I just missed a day or two, but not sure how. Wonk wonk, I have 87, says RB. You can get that much higher now. You only need 1 ticket to win. Exactly, James. Only 1 ticket wins it all. Oh, I understand. No, I couldn't every day. I had to watch the channel. Yeah, you can watch it. Liz, that can't be your excuse. You had to watch the channel, so you couldn't click a button. Yeah, no, you can get a daily bonus as well. 5 tickets every day if you were. But again, there's only 1 day left. It's worth getting those daily bonuses as well. What time is the giveaway? It's Martyn, am I right in saying it's in 24 hours from right now? Can you confirm that to me, Martyn? Am I right in saying the giveaway is in about 24 hours from now? Am I right in saying that? I'll wait for Martyn to respond, and then I can very confidently say that to you guys. I've muted. Yeah, I hadn't done it for so long, guys, and then I had to go and do it. Is the news good or bad? I think the minutes are pretty good. Yeah, I don't think there's a major problem with the minutes. I think it's good. How's the market reacting? How is the market reacting? Let's have a look. I don't know if this is refreshed. Give me one moment. Why is that not? Yeah, here we go. Crypto's pretty much up. Let's go over to the S&P 500. I don't know if this is refreshed. There we go. Nvidia's up 3%. Tesla's pretty flat. The stock market's not doing too well at the moment. We'll go into the individual charts in a second. Let's have a quick look at the Nasdaq as well. I don't know why that hasn't refreshed. I'll check back on that, but here, this one's refreshed. It's the S&P 500. Okay, Nvidia's down actually, sorry. Nvidia's down 1.21%, Apple's flat, Google's flat, Microsoft's flat, Amazon's flat, Meta's down slightly, Avgo's down slightly, Tesla's down 3.5%. Yeah, the market seems to be a little bit down right now. What happened? All the way to March. Yeah, I was just checking. Someone said, what happened? I thought we were off. Let me go back to the live chat and have a quick look over here. Yeah, the market hasn't reacted too much to it at this point in time. I'm taking it as pretty bullish, the minutes, and I'm very excited for 2026. The XRP chart is going up. Bitcoin's going down. Who knows what's going on, says C. Marty. Zach8 says, so funny, Nick, even President Trump was taking a nap on shift. Martyn for president. Vocal Foster says, a source I know at a certain dark stone company tells me that the reason XRP is going sideways is because there's a large option expiring end of the year, so they need to keep the price steady. No, I wouldn't say that, but we'll see. I'm sure volatility will return to XRP shortly. Ascend says bad news and the market pushes up. I don't think it's actually inherently bad news. I don't think it's bad news. Let me just ask Martyn. What happened to Bitcoin option expiry event? I haven't covered it. Spin the wheel, says James. Yes, there's going to be spin the wheel. Time for a bull trap, says Songs for Space. Okay, what I'm going to do now is send everyone to the giveaway event. So you can all go over there and you can see it in your time zone. You can press the notification bell. You can leave a comment and a like so it gets suggested to you when it comes. But guys, please don't miss out. Last time a couple of people missed out because they weren't there and they didn't see their email in time. Just be at the event. So if you win it, you can claim it there and then. Otherwise, it will go to the next person. Songs for Space says, wish I was buzzed on a golf course, 80 degrees and sunny. It's 20 degrees here now, says Songs for Space. I think I've answered all questions. Going to run the S&P 500 up to 39 and then rug for disaster black flag, says Songs for Space. I'm pretty, what happened? Has Powell spoken? It was in the FOMC Minutes, Matt Grims. It was the minutes. It wasn't the speech. It was the behind the scenes, what they were talking about. Last dump before the big pump. Yeah. The lack of breath really shows on those charts. Yeah, it's the last day of trading really. Tomorrow, is it half day or something's going on in the markets? The liquidity is going to be low. Most people haven't returned from their Christmas break. So there's not much going on in the markets. I think we'll start January with a bit of volatility. But yeah, the portfolio will start, and then let's focus on tomorrow. The giveaway, and then with 2026 we're going to have so much coming, all focused on you guys. But until next time, this video, this live show will take you directly to the giveaway page. Let it run. It will automatically take you there. All you need to do is go over there, hit the like button, press the notification bell on that video as well. If you don't know how to do that, I'll see if I can show you. If you go to this screen over here, there'll be a trailer on the right hand side of the trailer. There'll be a little box over here, a little tick over there. You open it, you expand it. It says what time it's live. It's in about 23 hours, 24 hours. It says notify me. Press the notify me. Also set an alarm. Hit the like button. Leave something in the comment section. I'll give you the link to that show right now. There you go. Go and check out the newsletter. There is a 1 week free trial. Go and sign up. And there's a free plan. But I will see you all tomorrow in the morning forecast show, 2 hours before the opening bell. Until next time, I wish you all the best of luck in tomorrow's show and in tomorrow's giveaway. I hope you win. I don't know who I'm speaking to, but I hope you who are watching wins one of the Lucasades. But again, it can be anyone. It can be one of the trolls. It's open to everyone. Until next time, take care of yourselves and each other. I hope you enjoyed the minutes. My final analysis is there will be no rate cuts until March. Still pretty unlikely in March. I'm going to be watching every inflation data event like a hawk. Why? Because it was very clear in those minutes everyone's going to be watching it like a hawk. So that inflation events means more than ever, if inflation's coming down, everyone is going to be on board for rate cuts. If it doesn't, then we can have more people pausing. So inflation is all what it's all about. Little friend on the screen as well. I'm going to need to get rid of the ladybirds. I thought I got rid of them all, but there was one more left behind that camera. I think it's a warm spot, so he's come back to it. We need hashtag save the ladybird, otherwise it's going to get killed, guys. See you all tomorrow, 2 hours before the opening bell. I'm bullish for 2026. See you tomorrow. Bye-bye. This will take you directly to the giveaway event, so just wait 30 seconds, a minute, and you'll automatically be at the giveaway event, so you can watch the trailer, understand it, enter, win more prizes, and know exactly what's going on.